Hello friends, James Stevenson here answering the question, how does Tesla earn its average dollar of revenue? And then how does Tesla spend its average dollar of revenue? I have the answers for you in two charts from my 69 tweet Tesla earnings forecast thread that I sent out on X on Monday of last week. Before I jump to that, let's check in on my co-host Loki, who is curled up and sleeping in bed. Before I go to my desktop to show you, well, that was actually part 5 that we just looked at in the previous video. So I will proceed to tweet number 6, and we'll talk about tweets 6 and 7 from my tweet thread in this video. The first one here says, here's a chart showing where Tesla's average dollar of revenue comes from, including my forecasts for the rest of 2023 through 2025. Tesla Energy should see substantial revenue growth from Megapack XL as new Megafactories, trademark Bradford Ferguson, are built and ramp up, aided by U.S. IRA incentives, being the Inflation Reduction Act, the humorously named Inflation Reduction Act, in which the U.S. government spends more money it doesn't have. That's a great way to fight inflation. Now, I'm not opposed to Tesla being able to collect some of the money the U.S. government said they wanted to spend. That's fine. I just find it funny. I sometimes find things funny that not everyone finds funny, that being a good example. Okay, so where does this chart begin in time? It begins with 2018 full-year actuals. That's what this Q4 is doing down here. It doesn't have a label, but you know it's 2018 because it came before 2021, 2020, and 2019. So that's what it is. So 80% of Tesla's revenue, or 80 cents on the average dollar of revenue, came from selling automobiles in the full year 2018, with 2 cents worth of Tesla's average dollar of revenue coming from regulatory credit sales. These are sales to competing automakers who did not produce enough electric vehicles to comply with applicable law, so that they don't have to pay the government even more in fines for their failure to produce and sell enough EVs. Then we have automotive leasing here in blue, so you don't sell every vehicle to cash buyers. Some of them are leasing that vehicle from you for 3 years and then giving it back. Then we have the energy segment here. This is energy production and storage. Production means solar panels and solar roof, and storage means products like Powerwall, PowerPack, and Megapack. Most of Tesla's energy revenue will come from the Megapack XL product as time goes by, just because they can charge so much per Megapack XL. They're about $2 million each. You can get a little bit better deal than that if you make a large bulk purchase and get the price down to like $1.8 million. But pricey, which is why only utilities are going to be ordering those, or companies that have a huge need for energy storage solution. And then services and other is the last group here. So everything else that hasn't been covered yet is in here. This is the repair, out-of-warranty repair work being done at Tesla service centers. This is the Tesla online store selling merchandise. It's the Tesla insurance business. It's stuff like that. So this is the breakdown, and you can see that over time it hasn't changed that much. The actuals are shown to the right of this white block that says actuals, ending with Q2 2023, the most recently ended quarter. 82% of Tesla's revenue came from selling cars to cash buyers in Q2 of 2023, with 2 cents from regulatory credits, 3 cents from automotive leasing, 6 cents from energy, and 8 cents from services and other. These numbers are not all that different from where they were back in 2018. It kind of makes it look like it's very easy to forecast Tesla based on looking at this chart, but you can see there were times when regulatory credits were accounting for more of Tesla's revenue, back in 2020, 2021. And that's going to be less and less of Tesla's business as time goes forward. More like 1% of revenue will come from regulatory credits. And the automotive business ought to be declining as a percent of revenue because the energy storage business is going to be growing faster than automotive will. And that's what matters when you're looking at a chart like this one, where every quarter is indexed, meaning all of these have to add up to exactly $1. If these were percentages, they would have to add up to 100% every quarter, right? You can only have 100% of your revenue. So for every quarter, where does the average dollar of revenue come from? That's what this distribution is giving you. Then on the next tweet, which I want to get to in this video as well, I have a sister chart. Somebody asked me, what's a sister chart? Why does that make sense? Well, I'm just saying that it's the same kind of chart, but with a twist. This one isn't about where Tesla receives its average dollar of revenue. This is about what Tesla does with that dollar. How much of that dollar do they spend, and how much of that dollar is left over as profit. That's what this chart's good for. So I captioned it, its sister chart shows how Tesla spends its average dollar of revenue, with unspent money in green as non-GAAP earnings. Now I could have shown this with GAAP earnings, which would have been smaller because a little chunk of these green bars would have gone to stock-based compensation. But I didn't do it that way. I excluded stock-based compensation from this by talking about non-GAAP earnings. So part of the green bar is the stock-based compensation expense. All right, the everything else, excluding stock compensation bar, includes income taxes. So why does this gray bar get bigger from where it is today? I'll make the chart bigger in a second. Because when Tesla earns more money, they'll be paying more in taxes. These charts are shown on a trailing 12-month basis to smooth out seasonality. That's a good reminder for me to mention to you that that's a good way to strip out seasonality, is you show everything on a 12 trailing month basis, and then every month of the year gets counted exactly once. And when you do that, no matter what time it is within the year, your information is going to be comparable to any other time period you want to compare it against, because all time periods include a Q1, a Q2, a Q3, and a Q4, even if they aren't from the same fiscal year. So in the case of Q2, that's usually a pretty weak, in the case of the January, February, March time period, that's usually a little weaker than the October, November, December time period is, right? That's what you mean by seasonality. Okay, so what do we have here? I used to bother making these red instead of green. I stopped worrying about that. So the green bars can be on the right or they can be on the left off the edge if they're negative. So how does Tesla spend its average dollar of revenue? Well, again, I'll start back in 2018 and show you automotive cost of sales was about 66 cents. About 2/3 of Tesla's expense went to automotive cost of sales. Those are the costs directly associated with making the vehicles that people bought or leased. Then you've got the same kind of idea for energy. Tesla Energy cost of sales are here. Then you've got the services and other operating expense area. So operating expenses are services and other, and research and development, and selling, general, and administrative costs. So these used to take up a lot of Tesla's budget. 9 plus 6 is 15, plus 11 is 26 cents worth of operating expenses. And the larger your revenue gets, the smaller these will become as a percentage of your revenue, as long as they don't grow as fast as your revenue does. That's called operating leverage, and it's a good thing. You want to invest in growth companies because as they grow, they have operating leverage. Their operating expenses become a smaller and smaller percentage of their sales. And you got everything else excluding stock comp here. It's okay, Loki. Loki hears somebody on the front porch. Let me check. All right. We just got a delivery, buddy. Oh, you did okay. You did good. All right, let's get you a reward for defending the house. I'll switch to the Loki's bed cam here and give you a little lanyap for this video. If you don't know what lanyap is, that is a little something extra that you didn't bargain for. Good boy, Loki. Yes. Thank you for defending the house. Thank you for defending the house, little guy. Yes. Love you. Okay. All right. Okay. Yes, it's okay, Loki. It's all right. So back to sharing my screen again. As Loki gets really fired up when he talks about operating leverage. So as you can see, over the past 5 or so years, these are the most recently reported actuals here, the services and other area has declined from 9 cents to 7 cents. The research and development program for Tesla is half as much as a percent of revenue, 3 cents per dollar. It used to be 6 cents per dollar and quickly came down from there. It's been 4 cents or 3 cents every quarter for a few years now. Then the SG&A, excluding stock comp, has fallen pretty steadily, 11 cents, 9 cents, 8 cents, 7 cents, 6 cents, 5 cents, 4 cents, and 3 cents in, sorry, it's still 4 cents. Yeah, the SG&A is the darker of the blue colors here. So it's still 4 cents, and I'm projecting it to stay there for a few more quarters before falling a little bit more as Tesla's revenue continues to grow. Then we have everything else, excluding stock comp. This is all those other lines on the income statement after the operating expense line. So taxes are included in there, but Tesla wasn't paying taxes for a bunch of these years because they weren't making profits. Tesla wasn't profitable, so they weren't paying income tax on income that they didn't have. As I move the camera back so you can keep an eye on Loki. But those profits have been getting bigger. So the non-GAAP earnings went from 3 cents past 10 cents back in 2021, topping out around 17% of revenue at the end of last year, Q4 2022, and that has trimmed back some to about 15 cents. I've got it staying at 14 cents for a few more quarters before it gradually builds back up again and goes to record highs starting in, the end of 2024, beginning of 2025. I think Tesla is going to be showing more than 20% of revenue as non-GAAP earnings toward the middle to late 2025 time period. That is what's in my forecast, and that's my video. So one more check-in with the feisty and fiery Loki we unexpectedly got in this video. Before I say, if you've enjoyed this video, remember to click the like button for me. That really helps. And thank you, of course, to everyone who supports me, whether that's on Patreon or on YouTube or by joining my channel on X or subscribing to me on X for only 69 cents per week, $3 a month. That's not so bad. And a special thank you to my 2 executive producers, Kathy Hitchler and Rebellionaire.com, and I'll see you in the next one.